Financing medical office buildings, a complete guide for investors and business owners. And medical office buildings, or MOBs for short, have become one of the most sought after commercial real estate asset classes in today's market. And as healthcare demand continues to rise as a result of population growth and aging demographics and expanding outpatient care, investors are increasingly attracted to medical office properties for their stability, strong tenancy, and long-term potential income. However, financing a medical office building is a little different from financing a traditional office, retail, or industrial property. And understanding how lenders evaluate these assets can significantly improve your chances of obtaining favorable loan terms. So first, let's talk about why investors love medical office buildings. And medical office buildings offer several advantages. They have stable tenant demand with longer lease terms. They're recession resistant. They're based on healthcare services with high tenant retention rates. And there's a growing outpatient healthcare trend, and there's generally strong occupancy levels in many markets and MOBs. Now, unlike traditional office tenants, medical practices invest heavily in specialized build-outs and equipment, making relocation very expensive and less likely for them. So what are some types of medical office building loans? Well, there's conventional bank financing, and many local, regional, and national banks actively lend on medical office properties. Typical terms include, say, 65 to 80% loan to value, 20 to 25 year amortization with 5, 7, or 10-year fixed rates, and competitive interest rates. Recourse is often required. And these are best suited for, say, owner-occupied medical offices or stabilized investment properties. Strong sponsors with experience. SBA 504 loans. These are for owner-user healthcare practices, such as a physician or a dentist or a veterinarian or a chiropractor or a physical therapy clinic. An SBA 504 financing can provide up to 90% financing, long-term fixed rates, lower down payment requirements. There will be owner occupancy requirements. So there's credit union financing, and credit unions often provide attractive financing options for healthcare-related properties as well. And some benefits from them may include flexible underwriting with competitive rates, and it's really about relationship-based lending and local decision-making. There's also CMBS loans, and these are for larger, stabilized medical office assets, and those are the type that would qualify for CMBS financing. And the advantages there include, say, non-recourse structure, which allows you to raise capital, longer fixed rate terms, 5, 7, and 10 years, competitive pricing with higher leverage potential. But there's also life insurance company loans. And for premium medical office investments, low leverage with strong tenants and institutional quality properties, say that 3 times fast. But life companies frequently offer long-term fixed rates with a really attractive pricing, non-recourse financing as well. And what lenders evaluate? Well, first is occupancy. Most lenders prefer 85% plus in occupancy with a stable rent roll and a diversified tenant mix. But tenant quality is another thing they scrutinize. Healthcare tenants are evaluated based on the specialty, the years in business, the financial strength, the weighted average lease term remaining, but also the credit profile. And lease structure is another topic. Lenders favor longer term leases, triple net leases with annual rent escalations. And debt service coverage ratio, or DSCR. Most lenders are going to require a minimum of 1.2 to 1.35 DSCR. And the stronger the cash flow, the more financing options that will become available and at better prices. So another category is sponsor experience. And investors with healthcare real estate typically receive a little bit better terms and higher leverage and faster approvals. So let's talk about medical office development financing. So developing a medical office building requires specialized construction financing. And lenders are typically going to review your construction budget, the architectural plans, MEP drawings, but also how qualified is your contractor, and do you have any pre-leases signed or any physician commitments. Market demand is another category. And construction lands generally provide, say, 60 to 75% loan to cost with interest only payments during construction, and it can be converted to permanent financing when it's stabilized. So, why healthcare real estate remains attractive? And several trends continue supporting medical office demand. Let's talk about the first, aging population. So, millions of Americans are entering retirement age, increasing healthcare utilization, but also outpatient care growth. And healthcare providers continue shifting services from hospitals to outpatient facilities to keep their beds available. And there's population growth as well. So, markets such as Houston and Dallas and Austin, but also in Phoenix and Tampa and Nashville, continue experiencing strong healthcare demand. Healthcare employment growth. So, healthcare remains one of the fastest growing employment sectors in the United States. Let's talk about how CommLoan can help medical office investors. And nobody knows, or this is not a secret, but finding the right lender can be challenging because every lender has different requirements, property preferences, and underwriting guidelines. Now, through CommLoan's proprietary Cupid technology, borrowers gain access to hundreds of commercial lenders through a single platform, allowing investors to compare financing options across banks, credit unions, life companies, CMBS lenders, debt funds, and agency sources. And CommLoan's marketplace technology helps efficiently match borrowers with lenders based on the property type, the loan size, the occupancy, the leverage, and business objectives. And instead of approaching lenders one at a time, investors can leverage a nationwide network of hundreds of lending sources and thousands of loan programs through a centralized platform designed specifically for commercial real estate financing. So, final thoughts for the day. Medical office buildings continue to be one of the strongest commercial real estate sectors available today. And their stable tenant base with their longer lease structures and growing healthcare demand make them attractive investments for both new and experienced investors. Now, whether you're going to be purchasing or refinancing or expanding or developing a medical office building, securing the right financing structure can dramatically improve your investment performance. So, working with a commercial mortgage advisor like myself, who has a good understanding of healthcare real estate, but also has access to a broad lender network, can help ensure that you obtain the most competitive financing available. And that's what I'm here for. Thank you for watching. That's it for the day. Please visit my website, billrapp.commloan.com. You can start a pricing scenario and schedule a consultation so that we can have a conversation. Thanks for watching. Have a good day.